I mean, silver has garnered a life of its own. You have 28 as an important number. It's based on these tops that come in right here. The next technical level is 28.38 with these record highs that came in earlier, right at around $30 per ounce. If we see gold on a closing basis break above this resistance line right here, and it's at a pretty strong tack, a 53% angle, this would be towards the third quarter of this year to the end of this year, we could test 5,500. But of course, before we do that, this is the key mark to beat, which is the recent all-time record high above 2,400.
Silver prices have declined this week, reaching a one-month low despite weaker than expected U.S. employment data, which typically boosts demand for safe haven assets like precious metals. This ongoing downtrend followed a significant rally last month as geopolitical tensions eased and traders profited. Gary Wagner points out a notable occurrence about 2 weeks ago when silver opened at approximately $29 per ounce and closed near $27.50, marking a substantial downward shift of nearly $1.50, estimated to be over a 5% decrease. However, as of May 7th, silver saw a rise of over 3%, opening at about $26.86 and currently trading at $27.24. This increase suggests that the silver price threatens to reverse the short-term downtrend it has been in since April 12th and begin a new uptrend. Such a reversal is significant, given the old maxim that the trend is your friend, indicating a switch to a bullish bias, favoring longs. If the silver price breaks above the $27.53 May 7th high, it will likely increase the growing body of evidence pointing to a trend reversal. Silver has seen a strong rise since early May, breaking above the last higher low of the downtrend and surpassing both the 50 and 200 simple moving averages, SMA. Bullish momentum has been robust throughout the uptrend. Gary notes that reaching $30 per ounce for silver seems to be a crucial threshold often met with resistance before a pullback in price action. Gold prices edged lower on Tuesday as the US dollar strengthened, creating a less favorable environment for gold investors using other currencies. This movement came ahead of further remarks expected from Federal Reserve officials, which traders closely monitor to gauge future monetary policy directions. Gary highlights a potential flag formation indicating a possible upward movement if certain resistance levels are breached. A long-term target of around $5,500 per ounce, albeit over an extended time frame, is possible. We will present clips from Gary Wagner's interview with Kitco News. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I mean, silver has garnered a life of its own. It tends to sometimes move in unison with gold and sometimes not. When it does, it tends to outperform gold on the way up and outperform percentage drawdowns on the way down. I remember this particular day that occurred about 2 weeks ago. That's when we saw silver open at about $29 per ounce and close that day at about $27.50. So it was just shy of a $1.50 move to the downside. I believe it was almost over 5%. Today, we've got a rise well over 3%, opening at about $26.86 and currently at $27.68. The key levels that we want to watch, I think the most important level is based on a combination of a 50% retracement. It's not a fib number, but traders have been using that 50% mark in terms of a correction, and it has shown to be a valuable price point to always look at. But the fact that it corresponds with the simple 50-day moving average, that's this green line here, tells me that this is solid and major support at 26.40. It broke over the 38.2% fib retracement at 26.5 cents. And that being said, you have 28 as an important number. It's based on these tops that come in right here. The next technical level is 28.38 with these record highs that came in earlier, right at around $30 per ounce. When we look at a candlestick, you've got the real body. On a green candle, you've got the open and the higher close. On a red candle, you've got the open and the lower close. But then you get the wick. So the wick, the upper wick is the price action from the real body up to the high of the day. And that is right here, just over $30 is a wick. You can see that right on this one. That's the longest wick we have. And you'll look at lower wicks coming right to support last week. In other words, as it was trading lower, you had a strong down day. You had the market trading sideways, another strong break to the downside. And then you had these series of lows that all came in on Friday, Thursday, and Wednesday, right at around 26.36. And that's why I believe that that is a strong level. What I've done is put an extension in that goes back to 2022, when gold is at about 1,800 up to about 2,200, this big rally. Then we look at this correction, which culminated a little bit below 1,900 and start charting from there. So from this point here at about 1,900, the extension that is a 6.18% extension comes in at 21.46, 22.16, and then the one-to-one relationship. In other words, if we look at this rally here and compare it to this rally here, that would culminate right here at about 2,300. That's why we're pegging support at this level. But I'm kind of seeing another potential flag formation in that we've got our pole here. We've had a sharp decline from these highs right in here. And so if we see gold on a closing basis break above this resistance line right here, and it's at a pretty strong tack, a 53% angle, we could, and again, this is on an exceedingly long-term basis. I'm not talking about in a couple of days or even a couple of weeks or a month, but this would be towards the third quarter of this year to the end of this year. We could test 5,500. But of course, before we do that, this is the key mark to beat, which is the recent all-time record high above 2,400.
The Federal Reserve stood firm on interest rates during its recent meeting, choosing not to cut as it continues its battle with inflation, which has become increasingly challenging. In a move widely anticipated by the market, the U.S. Central Bank maintained its benchmark short-term borrowing rate in a targeted range between 5.25% and 5.50%. This level has held since July 2023, the last time it hiked rates, taking it to its highest level in over 2 decades. While keeping rates steady, the rate-setting Federal Open Market Committee did vote to ease the pace of reducing bond holdings on the central bank's balance sheet, representing a subtle shift in monetary policy. Despite widespread expectations of rate cuts, Gary speculates that the Fed might aim for 2 cuts, although he acknowledged the uncertainty surrounding such assumptions. He highlights the interconnectedness of various markets, particularly the dollar's sensitivity to Federal Reserve statements. At the FOMC meeting, the Fed adjusted its balance sheet reduction strategy, slowing asset liquidation by withdrawing $30 billion less monthly, totaling a $65 billion reduction. This signals the Fed's nuanced response to inflationary pressures, emphasizing balancing balance sheet management with interest rate policies.
What I found most interesting about today's move in both gold and silver, where we had solid moves to the upside, is at first analysts were looking at this, besides the uptick in geopolitical concern with what's going on with Israel, was a delayed reaction to the jobs report that came out on Friday. In fact, on my weekly show and the weekend review, I talked about that it was perplexing that the jobs report came in the way it did, meaning that it certainly came in well under expectations, and we didn't see a sizable move in gold. In fact, we saw the opposite, and the same with silver. This is silver on Friday. And it didn't quite jive with what we should see. In other words, there are certain relationships that we look for, and those relationships get tested every time a new substantial data point comes out, and the jobs report is an exceedingly important one. We didn't get that on Friday, but we certainly got that delayed reaction today. Right. And that, coupled with an uptick in geopolitical concern, is really what moved the market substantially higher in both gold and silver. And realize that during the FOMC meeting that recently occurred, they left interest rates unchanged. B, they talked about that they really need to see something in terms of movement before they consider cutting rates. They might have less rate cuts. Most analysts are penciling in 1 or 2 rate cuts. I still believe that they'll try to squeeze in 2.
Okay.
But that could be an incorrect assumption. The one thing that you want to look at when we look at something like this is how all of these markets work together, and the dollar being absolutely sensitive to statements by the Federal Reserve. And what was most interesting about what we saw was that although they did not cut rates and they left them where they are, they made an important announcement about their liquidation of their asset balance sheet, because the Fed has been pulling money out of the money supply at about 95 million, I believe. It could be billion.
Yeah.
The numbers are so large, they confuse me sometimes. $95 billion per month. And so what they said is that they're going to continue to pull money out of the money supply, liquidating assets from the balance sheet, but they're going to do 30 billion less per month. So they're only going to be contracting the money supply by 65 billion rather than 95 billion. So they're still contracting, but they're leaving an additional 30 billion per month that they weren't leaving in prior to that. And that's an important thing that the Fed has done, because aside from interest rates, that is the other effective tool in their toolbox to deal with inflationary pressures, is balance sheet reduction, QT, or adding to the balance sheet, which is QE.
Silver's struggle to sustain upside momentum may lead to a test of the short-term top at $27.73, with a potential trend change to the upside upon breaking this level. This move could spark further acceleration in price. Meanwhile, gold saw a modest increase to $2,317.37, with a critical pivot point at $2,310.20, indicating future price movements. Where are the prices heading next? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.